Hello everyone, welcome back. This is the black box. So today in this video I'll be showing you a road on the hour time frame, on the hourly time frame, and I'll show you how TP2 is very important. Okay, so right here, if you notice, I have measured from the candle's high to the candle's low. That is the breaking candle, the 30 candle. Okay. So when I project it to the downward, because the price went to the downward direction, that means I am selling. Okay, so right there is TP2. So notice what the price did after hitting TP2. Look, it hit TP2, it went up, and then finally a deep uh, drive to the downside before moving and changing its direction to upside. Okay, so unfortunately, I can't show you the candles. Maybe if I zoom in right here, as you can see, um, let me see, from up there to down there, as you can see, TP1 was here, right, exactly as this candle. So after taking that low, look what the price did. It just collapsed. It collapsed. So this is euro dollar on 1 hour time frame, and TP2 is placed is mostly hit. It is high probability target. It is a target. Okay, their target is TP2. I will show you. I have a solid evidence that TP2 is what they are seeking. They are seeking TP2. After accumulating just like this one, they are seeking TP2, as you can see. After accumulating here, they are seeking TP2. Then this price run that you are seeing here after TP2 is because if you go backwards, you will find that there is an hit. Okay, there is undelivered two candles black box more than this one. Before this, okay, before this one is contributing to this two candles black box. This black box is contributing to the previous one. Okay, because the previous one is the one that determines if the price will move like crazy. I mean 100, 200 pips. It is all based on the previous candle, I mean the previous black box's height. Their height determines the price's leg. Okay, the price's shooting or dumping. Okay, the height, the black box height. As you can see here, the height, since the height is very high, the TP is also very long. Since the height is long, the TP will be long. It is directly proportional to the height of the black box. If you notice here, let me zoom in, right there, what do you see? The height. This black box right here, it is very minute, maybe you won't be able to see it, some of you, but I hope you are seeing that one. Okay, so since the black box's height is very small, as you can see, the TP will be very small. It's simple as that. It's simple as that. TP2 is right there. TP3 is this one, as you can see. Okay, it's simple as that. So this is the one. Okay, the lesson that I wanted to show you right here. Okay, so it all depends on the black box's height. Okay, the TP and your stop loss, even your stop loss too. The target will be very high if the black box's height is very high, which means if the banks or the big money, if the big money decide to accumulate huge price swings, if they decide to control this much price swing, mind you, it is from, as an example, we can take this one. It is from 1.111193 to the price level is 1.10810. This whole thing is predetermined by the big money. Okay, they already took this under their control, which means they know they are gonna move this thing to TP2 and more if they decide. But TP2 is easily reachable. It is their target. It's minimum. It is a minimum target. So they control this much lots, this much price swings that they are thinking to send this price to huge pips. Okay, when you see these kinds of black box, big blocks, these big blocks, these are used as a directional indicator gauge. Okay, it is used as a gauge. It can be used as a gauge. So this one Fibonacci extension, when you extend the Fibonacci over this black box, you will see that TP1 will be over there, TP2 will be below the sky. It is a long way, which means a lot of pips, a lot of distance to cover. Okay, so it all depends on the head of the black box. What are the banks thinking? As you can see here, the head was small. Look, they delivered it a little bit and then they started accumulating again, right? The head was small, they delivered, they came back and then they started accumulating. Hit TP2 and then they started accumulating. Hit TP2. The price that went beyond TP2 is signifying that there is undelivered undelivered black box on previous days, on the previous months, on the previous year. Okay, depending on your time frame, which time frame you are trading in. Okay, there is undelivered TP2. That's why this price is moving like crazy, and sometimes the news can disrupt this logic. Okay, the news they can drive that thing to absolute craziness. They will drive it to nuts. They will drive it to the sky if they can dump it to the ground. Okay, without any regard to your strategy. Okay, so sometimes it fails. Sometimes. Okay, the word here is sometimes. Okay, but most of the time it works. That's what we want. That is what we want, bro. We don't want 100% win rate. If that was the case, then there would not be any trade. There would not be any trading because they don't want to lose money. If you make money, they lose money. So they don't want to lose money. Okay. So this is the thing that I wanted to share with you, right? Okay. Let's scroll to the next screenshot and let us see what we got here. Okay, there we go. Beautiful. Isn't this beautiful? This is the one that I wanted to show you. This one and this one are the same. Right? $0 1 hour time frame, $0 1 hour time frame, and this is the one we are interested in. This is a black box. Okay, this is a black box. So what exactly happened? Based on this black box, you would enter exactly right there. Okay, but you are never trading this. Never. Why? I told you there is a rule. Okay, when you are trading the black box, if you see this huge bulky black box, that is signifying that is very very scary. It is not what can I say, it's not good for your risk, I mean for your money. Okay, mind you, it broke this, right? You enter this and look how much your stop loss must be above there. It has to be above there. There is no joke. So you cannot uh, put a stop loss that is this wide, this high, because you'll be out of business in one day, in a single day. So these kinds of things are not achievable. Okay, these are not good. These are out of our assumption. I mean, out of our view. These are only used for a directional purpose. They are used only for a directional purpose. We know that they are doing this shit right to send the price to one direction. I don't care if they send to the upside. I don't care if they send to the downside. All I care is, all I want is for the market to show me its hand, and then go with it. Go with the current. Okay, you cannot fight the ocean. You cannot fight the tsunami. You have to go with the tsunami. If you don't want to spend energy, okay, you have to go with the wave. You have to go with the current of the stream, okay, down the stream, with the river. You cannot go upside, I mean in the reverse direction, because you will kill yourself, bro. It is crazy. It is crazy. You might manage to go a little meters, but ultimately you will fail and you will be out of energy. You will be tired, and the current will take you back to where you started, or even below your money. Okay, your money will be lost. Okay, your money will be lost. You have to trade with the current. You have to trade with the trend. The trend. That's what we are doing here. That's what we are doing. I don't mean I don't mean to see the daily time frames. Uh, the daily time frames trend. No, if the daily time frame is bearish, and if the hourly time frame gives me my black post gives me a buy opportunity, I will enter a buy, bro. I don't care about the daily trend. I don't. I don't really care about the daily trend, bro. That is uh, out of my view. I don't care about that shit. Because as you can see, let's assume this is a daily time frame. And on the 1 hour time frame, as you can see, this thing, I mean, this is a daily time frame, right? One day is a daily time frame, okay? And then let's zoom in. What happened? What happened? We are in a complete downward direction, but I'm not trading the daily time frame, okay? I'm not trading the daily time frame. So if I'm trading the 1 hour time frame, that one candle represents one day, right? You already know this shit. It's a basic level thing. That one candle represents a day, one day of trading. Why? Because we are on the daily time frame, right? Since we are on the 1 hour time frame right here on H1, which means every candle represents 1 hour of time. They finished, they used 1 hour, full hour of time to finish, to paint this candle. So if I enter on the daily time frame, right, I am thinking that it's bearish, bro. It is bearish. I am entering a sale. I mean, bro, yes, I am entering a sale. I'm making money, bro. So now look at that right there. I entered the sale. Why? Because that price, I mean, that candle was trading down. If you notice that one, the green one, the hammer, like, okay, this one right there. So it traded down. it was bearish, it was red candle. When after entering a sale, it reversed direction and then went to my stop loss. Even worse, below my account, as you can see. It's a daily time frame, and I'm trading on the 1 hour time frame. So, what is the point of worrying about the daily trend, the daily bias, the daily shit? I don't see nothing here. I don't see the point here, bro. I don't see the point here. So our strategy mostly focus on scalping. It's mostly about scalping. Okay, it's all about scalping. It, we are not intending to catch the low, the high of the trend and drive it down, and we are not intending to catch the low of the day and drive it up. No, that's not what we are doing. We are taking what the market is giving us. We are flowing with the current. We are moving down the stream without losing energy. We are just sitting on our boat, just waiting for our destination to arrive. Okay, we don't spend any energy. We are just sitting, waiting until that moment comes. Until that moment comes, the moment of truth. That's where you execute. I will show you what to look. Okay, what to look before entering a trade and how to determine your risks. Okay. So don't worry about that. It will be coming. I'll show you everything. You will be equipped with everything, bro. So right here is the one. This is used as what? Directional purpose. This black box right here is for directional purpose. When I see this, I know that they're gonna drive the price to TP2 straight without any concerns about nothing. I will put a horizontal line just like this and wait for that price to gravitate down there. And when I see a black box just like this one, I take a trade based on that black box. Not the direction, not the direction of this big black box. Why? Because there could be pullbacks, small, small pullbacks, and dump. There could be pullbacks and dump and pullbacks and dump. This is how it moves, right? This is a downtrend. This basic market structure. Here's how it moves. So if market gives me a buy while we are in a downtrend and it satisfies my formula, my criteria, I will be entering a buy. I will not hesitate, bro. I will not hesitate. This is used as for directional purposes. It is for general idea. It is for a general gauge. It is showing us where the price might stop or the price might be heading. It could be stopping. So most likely it is gonna stop right here. Right here. It is for directional. It is for the fun of it. Okay. It's for the fun of it. It is just for yeah, baby. We know about this. We know about this. So if the price gives me a trade, if the price gives me a trade in the direction of the TP2 that I drew based on the bigger black box, if the price gives me, then I will be targeting that TP2. Okay, I'll be targeting that TP2, right? So as you can see right here, what happened? We got a sale. We've got a sale. Where? Exactly right there. This two candles black box is just beautiful. It is beautiful. It is out of this world. Look at this. You sell exactly right there. It satisfied everything. The 2.5%. It is not the 5% because the classical black box is the one with the 5%. When you are trading the two candles black box, it will be the two candles black box. It will be half of that. It will be half of that, and we are still getting the best price. That's why we are focusing on the two candles black box. It's just beautiful. It is beautiful. So what happened here? I sell that shit. Exactly right there is a sale. I sold $500,000 lot right there. Targeting where? You project this, measure the fib. You target TP1 will be here, TP2 will be down there. Okay? Measure this. Measure this, not the bigger one. The bigger one is just a general direction. After putting the TP2's location, I mean price level, and putting a horizontal line, you will not refer to. Do not refer back to that block. It is gone. It is not gone yet until that price line, the TP2 is hit. But in your mind, it is there. The only thing that you care about is this line, this line. Okay, okay, this line, this bigger black box line, the line, not the black box. That is what we want from this black box. The line, it is a line, the price levels and the TP3 down there. We don't care about this one. We don't refer anymore. If it is upside, it's the same thing. You put a horizontal line, that is where the price will gravitate. That is where they will send. That's where the big money sends the price. That is where they are stopping. I promise you, after reaching this shit, this price level, it will be dumping. After reaching this, the TP2, it will be pumping, just like I showed you here, right here, right here. Okay, there will be a change in direction. The target they are looking is TP2. It is TP2. How did you determine TP2? If you are trading the two candles black box, you have to trade the two candles black box. Okay, no joke. This one, if the breaking candle, I mean, you have to collect the bodies, not the wicks. The wicks are only used when the candles are anemic. Anemic, what does that mean? If the candles are very small like this and they form a black box, and when you measure the TP2, it is right there, that is where you use the wick to project your TP2. Not here. This is big candle, which means you are using the body. The body or whichever candles is low or high from the three. So only the three candles are the ones that's determining the TP and your stop loss and everything else. Okay, the three candles, they are the ones. The three, they are the holy trinity. They are the holy grail. They are the holy grail. So after determining your TP, it will most likely lay down there. Your TP2, TP1 up there, TP2, TP3 will be down there. Okay. After that, you say you sold the action, right? So you wait patiently. You patiently wait. Okay. You patiently wait. Right? So after that, we got another block, right? Here. What is it? 1, 2, 3. And what happened? Nothing. Nothing happened. We are in trade for this one, targeting TP2 down there. Right here, but here, nothing happened. Absolutely nothing. Your stop loss is up there at halfway of 2.5%. Okay, that's your stop loss up there. Because there is a stop hand. Don't forget about that. I have taken into account every possible situation, bro. I have taken into account every possible situation into this strategy, and it is incorporated. It is full, bro. It is full, and still now I am improving it upon it, and putting upon it, putting another thing upon it, trying to sharpen the blade so we can cut through the adversities. We can cut through everything that's coming our way, the obstacles. We're like, go away, like this. With a flick of a finger, bro. I don't care, bro. I know what's gonna happen. When that thing happens, I will take care of it. Do you see the mentality here? When I was trading the black box, bro, I was doing this shit, bro. When I was trading the black box, I don't care about nothing. I know I'm not gonna lose. If I lose in one direction, I know I'm gonna get it in the other. Why? Because we got the third model, bro. We got the third model. Okay? If the price breaks this high and hits my 2.5%, that is a moment of truth when I will be out of the trade in enter again in the opposite direction. And I will be right. Especially the third model, bro, it is better than the others. It moves like nuts. It is nuts when it moves, bro. It is nuts. It's crazy. It is crazy. So I know I'm gonna win in both directions. Why would I worry about anything, bro? I don't worry about anything. I'm just chilling, waiting for my setup. When that setup, gives me something, I'll take it. I'll take it. I will not hesitate. There is no station, bro. It's simple. That is how the black box takes your worries away, and you are just playing. Right? It is just a casual thing. You know you're gonna win. It is a casual thing, right? When you have that mindset, you don't worry about your stop loss being hit. You don't worry about if TP2 is not hit. You know it is gonna go there. I don't care if it comes back up. It has to go there. It is a must. It is a must. So, anyways, after entering the trade here, it came back up, right? So someone is, oh my god, my money is going, it's gonna below, bro. Oh my god, why would I do that? I think the 2.5% is not it. Come on, man. Oh my god, I think I made a mistake. No, you didn't. You made the right decision, exactly right there. That is right, never wrong. It is based on a proven concept, and a proven concept supposed to yield something. It's supposed to give you profit. A proven concept is proven. It is proven. It is not based on talks or mouthful lies. Shit. It is proven, scientific, experiential, experienced. Okay, technical, measured from top to bottom. Every adversity taken into account. Mind you, I came to the Tukanda's black box from the flag pattern. Mind you, I came to the flag pattern when I was researching about accumulation distribution. I I saw that there is something was going on in the price. I saw. I was using every kind of patterns like triangles. One day I was trading Aussie dollar and it broke this and I entered the buy. When I checked it back 1 hour later, this was what I found. This was what I found. So I immediately fall in love with this shit. Because I am exactly entering at the point of launch. Exactly at the break. Exactly at the moment of truth. No waiting. I will not wait. Isn't that beautiful? Based on time, we have an age. Based on time, we have an age. Because there are people who bought it there, who bought here 2 hours ago. Who bought here a day ago? Who bought here? Who bought it? Who sold it? Some of them selling it. Sell, sell, sell. But we are exactly buying right there. And look, the delivery. I jumped like crazy, bro. I jumped like crazy. My profit soared up. What the hell? What the hell? This is gonna be, man, a home run. So I felt amazing. I felt hopeful because there is no indicator, there is no gimmick, moving average cross, there is no stochastic. So after finding this about this, I researched everything. Including the wedges one, the triangles, the flag pattern. So the most appealing pattern that I found was the flag. The flag had a few manipulations, a few fake outs. That's the best word. A few fake outs. The fake outs were few. I mean, a little. They were not a lot of fake outs. When you are trading the triangle, boom, boom, boom. I remember that I was trading a pound shape, I think. Then it broke the downside. Trading this pattern, triangle pattern. It broke to this side. I entered the trade, sell, bam, sell. Almost immediately broke to the upside. Then lost money. I lost money on that one. I didn't know about the third model at that time, so I didn't enter a trade. I watched that price go without me like crazy. I didn't know about this. I was like you at that time. 2 years ago, couple of years ago, I think. Then, when I was experimenting and when I was collecting data on binary options on bucket option, I am not trying to promote them, okay? And basically, I don't recommend you to trade binary option. Don't even try it. There is another dimension, there is another criteria to be fulfilled, that is time. Not only you have to know the exact time where the price might finish trading, I mean, might be above or below your entry. You have to know the direction too. Too many adversities here. If I am right with the direction, I have to be right with the time too. If I am right with the direction and the time is not right, I will lose money. So, binary option is not good. It is never good. I've tried and tried, lost money every day. But on that adversity, with that hell, in that hell, a gold came out, a diamond. I knew about the price action. Price action is king. Everywhere it is king. It is king. Bro, let me tell you something. The one you think, so your favorite guru uses price action. I don't care if he's making millions of dollars. I don't care. It is still price action. Price action. Price action is king. Your favorite guru is using price action. There is no other thing. He's not an insider. He's not being tipped. Okay. If he's making millions, and if that is legit, that is a keyword. Legit. It has to be legit. Okay. Everyone can manipulate MetaTrader. Everyone can manipulate results and make you believe that they are making money while they are not. And they sell you a $5,000 course. A $5,000 course about moving averages. About moving average, support and resistance. A $5,000 course. Alright? It is all price action. There is no other gimmick. There is no other powerful godlike strategy. It's all price action. Mine is price action too. I'm not denying nothing. I don't deny nothing. When I say high probability formations, high probability situations, I mean patterns, and they are yielding me money day after day. What the hell would I want more than that? What the hell do you want? Isn't that crazy? Dumping everything that makes you money and trying to reach something that is not even worth your time. Trying to understand something that does not even yield a single dollar. What is the point of that? You are killing time. You are getting old. Your family needs you. You gotta have that freedom. You gotta escape the matrix, right? So, stick to what's working and try to improve it. Try to stick with it. Make it work for you. What does that mean? Based on your schedule, based on your risk assessment, based on your money, your account level. Try to fit it. Try to fit it into your lifestyle. Don't try to reach for another 100% winning strategy. That's not gonna happen. Not even the banks know this shit. Not even the banks know 100% strategy. No one knows that. No one. Absolutely no one. So anyways, let's get back to it. So I sold this one. Right? I'm waiting for my TP2 down there, right? I want the price to gravitate back to TP2. Alright? So that's what I'm waiting right here. Then what happened? It traded up back to the 200 block. What do you do up there? You sell. That is a sell. Why? Because TP2 is not hit. Okay? TP2 is not hit down there. What does that mean? It means every move coming back up to that price level is a second model. Every week that is coming back up is a second model as an opportunity to sell. That's why I first told you to enter the lowest amount you possibly can at the first breakup, because there are more opportunities for you to enter at better prices, because we got the first model, bam 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 bam, buy. There is no coming back up, there is no coming back down. It is straight going to your TP. If we are selling, bam. There is our second model, that is bam 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 bam. Break, support, bam. If we are moving the upside. If we are moving the downside, bam bam. Then break, support, resistance, then bam, sell. Just like here, right there. Right there. I was making money like this. You can see the results on my FX book. It's all there. I made 45% return on that small account. 45% with that old black box. Old. The stop loss was crazy high. The entry was crazy high. And my stop loss was crazy high. Even with that adversity, I managed to get 45%. 45% beautiful, right? A bag is a bag. Money is money. I don't care if it is 10 bucks, 100 bucks. I'm not trying to reach $100,000 a day. For now, I have to climb the ladder slowly. Climb the ladder. Okay? There is this ladder right here. You want to reach to this one. This is the fruit. This is the fruit hanging from the tree, right? You want to get that fruit and eat it, right? Because that's why that fruit is there. So, you started climbing. This is the ground. You started climbing. Now, in order to reach there, the best way is to jump, right? But it will be risky. It is very risky. If you jump from here, this is you. If you jump from here to there, you will kill yourself because you might fail and hit the ground. Okay? If you YOLO your life, you only live once. You only live once. The Wall Street slogan. Sorry. So if you want to YOLO your life, then jump. Jump. You got $1,000 account and you try to reach $100,000 in a day, and you enter two lots on gold. On gold, you enter two lots on gold, and you try to reach 100,000 on a day with that $1,000. That's not gonna happen. You're gonna kill yourself. That $1,000, it is gonna disappear like smoke. So the reason that I brought this ladder is you have to get up step by step, step by step. Finally, you'll reach that place. You'll reach that place. I didn't think that I would reach 45% return when I first started. I didn't think. Imagine that if it was $1,000 account. If it was $1,000 account, that what does that mean? It means that 1,500 close. 1,500. I made $500. Right? If it was a $10,000 account, 10K, it is gonna be 15K. Do you see where I'm going with this? If it was a 100K account, it is what? How much do you make? 150K. What does that mean? I made 50K return because that's 45%. It's actual 45K, right? $45,000. Isn't that gonna change your life? It will change your life. It will change your life. So You go step by step. You do not jump from a 10-foot story high apartment. Even when using a parachute, you are still descending slowly. You are still descending slowly, right? With a parachute, you are still descending slowly. Why? Because you don't want to kill yourself. You don't want to kill yourself. You don't want to kill yourself. So that's why we are still focusing on risk, because this trade could easily come back up and be the sell and support and move up, hitting your stop loss upside. So if you enter 100% of your account right here, look what you made. You messed it up. You lost your account right here. So that's why I encourage you. That's why I urge you to enter smaller, like 5% is the lowest. So on one trade, and the trade is 5%. When trading the black box, you might have 2 or 3 entries. So you are gonna divide this by half, which means you enter 2.5% on the right at the break, and the other 2.5% at the retest. At the retest. So totally you would have how much? 5% risk on this one, on this direction. 5% on this direction. Okay. So it changes direction, it moves up, and you buy that the same way. So now you are risking 10%. Why? Because you lost 5% on the downward direction, right? It went upside. You risked another 5%. So totally it will be 10%. So that might not be good. So sticking to 2% maybe a maximum 2% on the break, and another 2% on the retest. Now you got another. Now you got another a little money left, right? That is 1%. You got 1% for the upside. So you can't even use 1% rising at the break 1%. That 1% will grow like crazy, bro. Please don't let this deceive you. Don't let the low number deceive you. For a 100K account, that 1% is, bro, it is $1,000. It is $1,000. It is no joke. It is $1,000. 1% for 100K. So 1% doesn't mean it is low. It is not low, bro. It is not low. So enter 1% rising, 1% at the retest. If you get another retest, you might enter another 1%. That is 3% rising, right? So if the price changes direction, moves up, you get another 1%, you enter. And then at the retest, you enter another 1%. Okay, that's how it works. Then you target the TP2 and TP3. That's how it works. Okay, so let me get back. So this price went down, it retested. When it retests, you enter it another trade based on the second model. Okay, if TP2 is not hit, if TP2 is not hit for this one, if TP2 is not hit for this one, it is better to enter another trade, additional trade. If that is if Look, don't forget this. If the newest black box is not giving us an entry, if the newest black box is not giving us an entry, that is where you enter in the direction of the previous. As you can see here, this black box, this recon didn't give us an entry. Why? Because it didn't break the 2.5%. 2.5% right there, 2.5%. Which means I am entering a sell exactly right there. Okay. Then the market came back up again. Did it break the 2.5%? No, it is still close. It is trading still close, which means we are in a retest in the second model's territory here. The market is showing us its hand right here. The market is showing us. Okay? The market is showing us its hand, bro. It doesn't want to go to upside. That's why we are not seeing any break, any breach in the red line. That red line is 2.5%. The 2.5% is never touched. It's trading below that red line, which means we are selling. Then finally it confirms that we are moving down, as you can see. Broke. Then right here. Then right here, what up? Another sale. How? One, this one, two, this three. It traded halfway of the two candles. Then it dumped. Right there is a sale. Right there, I'm sorry. Right there is a sale. I am in a trade with this one, and I am in a trade with this one too. Another 1% risk. I said that shit. Targeting down there, that's most likely the TP to down there. Right there. Okay. Then what happened? Then I see what the candles are doing. So now exactly right there I am making money with this one. Because as you can see it is below my entry right there. Based on this one too, I am in a profit. Now what happened? Now what happened? Another black box formed right here. 1, 2, 3. Okay? 3 black box formed right here. And what happened? It broke the 2.5%. What do? I buy. I buy. I told you that we are scalping. We are scalping. The other positions are still in play. I don't touch nothing. I sold right there, sell. I have sold down there, sell. And I'm waiting for TP2. So right there, what happened? I buy. And how do I measure? Up above the then TP2 will be up there, I think. It will be up there. And then look what happened after hitting TP2. It dumped. Okay, at TP2 I take partials. Okay, I take partials. Alright, then I don't touch nothing. Okay, at TP2 you take partials, and that is where the price will reverse direction. If you want, you can trail your stop to your entry up there after hitting TP2. But the price might continue moving up, so I don't recommend it. Okay, I don't recommend it. Right? As you can see, what happened here. So I made money, and that thing made another black box here. I am showing everything here. I am showing everything. I am in 3 trades right here. 3 trades. Bam, that is right there. Sorry, let me finish this video because it's getting longer. As you can see, another buy right there. Bam, another buy. And this time, my TP is measured from up there to the bodies. Why? because the third candle, the breaking candle, is the one we are interested in, and the previous two candles. So their bodies is down there, the third candle's body is up there. Then I measure up. Then initially my TP would be around there, and TP should be up there, right? That's what I'm thinking. So I made money a little bit. Finally collapsed the price before hitting my TP, right? What does that mean? It means I wait. My stop loss is down there. Finally, with this candle, my stop loss is hit and I am out. What do I do? I sell. Okay? I sell. I sell. Right there is a sell right there. What do I do now? This Fibonacci right here will be reversed. I will reverse the Fibonacci and I will extend it to the downside because we are selling now. The price just showed us its hand. We are still in a trend with these two trades, one sell, two sells, and one buy right here. This one also right here also hit stop loss down there. Okay, we took partials up there and hit our stop loss. This one hit our stop loss. Now it's the downside now, right? We said that. So now after that, what happened? Everything came into profit. This one is in profit, the previous one. This one is in profit, the one that I sold to. This one lost money right there. This one is in profit. Three in profit and one lost money. Right? Then let me come back here and show you what happened here. Okay. So as you can see, this price came back down right there, and hopefully it hit our TP2 for this one, most likely for this one TP2 hit. So I took partials and I will not touch nothing. My stop loss is up there still. It has to be at 2.5%. Notice this, making equal highs. My stop loss for this sale is up there. My stop loss for this sale is up there. It is a little bit up there. Okay. I'm not trying to fit in. No, the price came but the close. Now I have to move it up. No, I will not change nothing. I will not drag it up. No, I have a predetermined price level and that's where it would be. If that predetermined price level is hit, then I will admit that my direction is wrong and the price is changing direction. So I will enter in that direction again. So look at this. So look at this. Finally, it accumulated another position here, right? As you can see. But it did nothing. It didn't break the 0.5%. Then right there, I think there was a buy. And right there, we had a sale, sold. TP2, take partials. TP3, that's where you take partials too, right? Partials means half. You can take half of your trade amount. Half. Then finally it collapsed. As you can see, it collapsed. It went down more and gave us more profits. Okay. If you want, you can get out at TP2. That is best. That is even best. Okay, that is even best. Why? Because at TP2, you know that what is gonna happen. The price will challenge you. The price will come back against your direction. Be sure. Be sure. The price will be hunting. Why? Because it finished its objective. Now it is moving in the direction of the newly formed platform. If the previous ones are finished, it will come back to the new one will be fulfilled. So it is better to focus on the new one and take most of your money at TP2 and trade the rest after TP2. Okay, trade the rest after taking most of your profit. Okay, maybe 70%, 60%, that would be enough. That's perfect. That's perfect. So that's exactly what you're gonna do right here. Okay, that's what we're gonna do. As you can see, right here there was a black box. So notice that I measured this from the bodies to the bodies. It didn't break the 2.5%. It is up there. Then it collapses at the downside. Now what do? I do nothing. Right there is a sell. Right here at the grid, there is a sell. There is a sell. Okay. Then I'll determine my TP2. TP2 will be down there. As you can see it is close to my TP2, so which means it is not really that good, because this week is the one messing us up. If that week was not there, we would have entered up there. But since the week is there, we will enter down there, and we'll take it to TP2. Okay, we'll take it to TP2. TP2 will take partial. You let the other run, as you can see. So the other 30% or 40% will be moving down. As you can see, it will be moving down. So you took partials. You took partials right at the grid, right? At the grid, and look, the rest will be moving down, as you can see. It went to hell. It went to hell. So this is it. In the next one, I will show you the other things to do and not to do, so that you will be better equipped with making money with the platforms. Okay, making money with the platforms. So you can see this is $0 again. So as you can see, I was measuring the TP2s. Okay, look at that. Here you can see TP2 and then dump. Here you can see TP2 and then dump and made a wick, then pushed up higher, never hit TP3, and then collapsed. Then look, hit TP2 and then look, it moved up and made a wick right there. Then pushed it up. So the best thing is to take partials at TP2. That's the best place, bro. That's where they return. That is their ultimate direction. The thing that you are saying that the price moving beyond the TP2 is because there is a black box that didn't hit TP2 before that. Before these black boxes, 1, 2, and 3 black boxes, there was a previous black box that didn't hit TP2. That is why you are seeing this. This moved to the upside beyond this TP2. I'll show you what that is. And this moves to the downside beyond TP2. Okay, that's what you're seeing. So this is it. I'll see you in the next one. So thanks for watching. Okay.